Hi friends, Simit here from InformedTrades.com. In this video, I want to provide a little bit of an introduction to pivot points, what they are, and how you can use them in your trading. A few key points. Pivot points are basically just a way to calculate support and resistance. It's a formula based on using their high, low, and close price. So whereas normally support and resistance is calculated by looking at the chart, this is more of a mathematical way, not as subjective. You just plug the numbers in, the high, low, close price, and you get your support and resistance levels to look at. It's included in most charting packages. It is a commonly used technique. So with most charting packages, you can just open up a chart, select pivot points indicator, and you'll get your support and resistance levels plotted on the chart. As is commonly the case with any indicator or support and resistance tool or technical analysis in general, you want to look for confluence. You want to look for multiple signs telling you the same thing. So don't just look at pivot points in isolation. How to calculate? Again, since this is since this is incorporated already in most charting packages, the math isn't that relevant, or you won't actually need to calculate it yourself. But just to review the basic formula, first you'll start by calculating the actual pivot point. You do that by adding the high price, the low price, and the close price of the previous candle, dividing it by 3. That's your pivot point, and from that number you can determine resistance and support levels. Typically, there are actually a number of ways of calculating pivot points, but what we'll focus on in this video is the standard method that's most commonly used. Once you've calculated the pivot point, you can then derive 3 resistance levels and 3 support levels based on that pivot point. It's easiest if you can see the example. Looking at the screen now, this red line right here is the pivot point. Then you have resistance 1, resistance 2, resistance 3, support 1, support 2, support 3. So once you calculate the pivot point based on the high, low, and the close of the previous candle, you can then use that pivot point to determine 3 resistance levels and 3 support levels. Okay, so the big thing with support and resistance for technical analysis in general is confluence. So once you have your support levels and resistance levels based on pivot points plotted on the chart, you can sort of look at the chart to see confluence, see what's going on, how is price behaving at those support and resistance levels. I've highlighted some areas where you can see some reversal candlestick patterns. So for instance, we see a long wick here, hammer formation could be seen as here as well, bullish engulfing bar at this support 1 level. So when you see that, price declines, bullish engulfing at support 1, that could be a sign of an indicator. Then it goes up and it rallies all the way to resistance 2, where you see what could be regarded as a tight candle, a doji-like candle, and a price in a small range suggests the possibility of exhaustion. So that's the basic idea. Once you have the support and resistance levels plotted based on pivot points, you can then just look for confluence. That's basically it. A short introduction. I like to think of pivot points as just a way to calculate support and resistance, another tool to look at. Maybe if you're having trouble calculating support and resistance, or you're not able to clearly see it subjectively, you can use this tool to sort of give you an idea of what other traders, what common formulas may suggest are support and resistance levels you want to take a closer look at. As always, if you have any questions or any insight you want to share, join us over at InformedTrades.com. Thanks and best of luck in your trading.